Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of Affinity bank shares. I promise by the end of this video you'll be able to discuss this report with the same confidence as a seasoned Wall Street analyst, or at least sound like one of this quarter Affinity bank shares just gave us a peek under the hood and we are here to decode it. We're talking about a regional bank trying to navigate the choppy waters of today's economy. So buckle up because we will talk about the key numbers, what they mean and how they stack up against what you might expect. But before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. It's a great space to discuss company reports and other investing topics. First up, let's clarify what we're even looking at. This is their 10Q filing, essentially a quarterly checkup report that all publicly traded companies have to submit to the Securities and Exchange Commission. It gives investors a snapshot of how things are going, both good and bad. This particular report is for the quarter that ended in March of 2025, so it is fairly recent. For those of you keeping track at home, as of May 6, 2025, there were 6,316,088 shares of Affinity's common stock outstanding. That is a lot of shares. Now, let's dive straight into the numbers. We will be taking a look at the consolidated balance sheets. These are like a financial health report card that gives us insight into what the company owns and what it owes. I'm seeing total assets of 912.5 million, 12.5 million, 12.50, 25, compared to 80.66.8 million to the last year in December. That's a notable jump showing the company has been acquiring things to grow. Now, digging a little deeper, cash and cash equivalents are up to $74.7 million, which is up from $41.40 at the end of the previous year. So that's also a pretty big leap. It looks like Affinity is holding a lot more liquid assets than before. I also see that loans have increased to 720 has affected quality of said loans. Now, one crucial metric we want to pay attention to, the allowance for credit losses on loans. This is the money Affinity sets aside to cover potential loan defaults. It sits at $8.5 million. Last year it was at the same amount, so it looks like the company thinks the risk profile hasn't changed, even though they issued more loans. Switching over to the liability side of the balance sheet, we can see the total deposits have increased to $730.3 million. That is a big change from the end of the previous year. Federal Home Loan Bank advances, or FHLB advances, and other borrowings are at $54 million, a slight decrease from December. So they have been borrowing less from these sources. Now let's move over to the income statements. These statements tell us if the company is actually making money and how efficiently. First, we see total interest income at $12 billion for the first 3 months of 2025, compared to $11.25, compared to $11.2025, compared to $11.2 million for the same period last year. However, interest expense also increased to $4.8 million from $4.5 million, showing that it is costing them more to acquire those profits. That's just the way things work in the banking world. Then comes a key line, provision for credit losses. For the current period, the provision for credit losses is at $50,000, which is actually an increase from zeroing to some investors, since it means that Affinity may be preparing for a world where more people default on their debt. Finally, we get to the bottom line, net income. Affinity bank shares reports $1.8 million in net income, up from $1.3 million in the first quarter of last year. So all in all, things are generally looking up, but let's keep digging. Switching over to the statement of comprehensive income, we can see that total comprehensive income is around $2.5 million. This means that there were more positive trends in the business than negative ones for this quarter. We need to talk about stockholders' equity. This helps us see what's been driving ownership and investment in the company. I want to highlight a key event, a major common stock repurchase costing $1.2 million of repurchase program, typically signals that the company is confident that the price will only increase. There's also a large dividend with a payment for 8.8 Latin 8 milliard dollars. While this is nice for the shareholders, it also lowered the equity of the company by a noticeable amount. Also, we can see that the company had to release employee stock ownership plan, or ESOP shares worth $300,000, a small but still considerable amount. Let's get into a discussion on cash flow. I want to quickly jump to cash flow from operating activities, which shows $9 million, an increase from previous years. I'm also seeing a net change in loans of around $7 million, meaning that they issued a lot more loans than were paid off. This comes with the need to have a strong, effective plan to manage these loans. The company mentions the net change in deposits and how it has increased by 56 million. That is a huge leap from last year. Alright, let's shift gears a little. Now, let's talk about the notes section. These notes are where the company provides additional details and explanations about the numbers. It's like the footnotes to the financial statements. I'll start with their nature of operations. Affinity Bank does the usual banking things like accounts, deposits, and loans, with a specialty in dental practice loans across the southeast and indirect automobile loans. Basic earnings per share is at 29 cents. This is up from 21 cents per share from the previous year. This may attract new investors, but existing shareholders may want to ensure that these numbers continue to climb upwards and don't fall. Next, I'm seeing information about investments. It seems that the fair value is at 40.9 million, and most of that are US government agency mortgage-backed securities. Now let's talk about the credit risks and allowances for credit losses. It shows that commercial loans, especially those tied to real estate, make up a big part of their book. That makes them particularly sensitive to real estate ups and downs. Finally, a large stock payout for ESOP, Pure Plea Stock Ownership Plan, of $317,000. So looks like the company is dedicated to ensure the growth of their ESOP. The company is stating that stock-based compensation is up to around $305,000 for the period. Be sure to check those values to make sure they are not being too generous. Lastly, with level 3 investments and loans around 700 millions, the company must make sure to consider significant unobservable information when determining their fair value of assets. Now, what can we take away from all of this information? Affinity Bank shares is growing, there's no doubt. Their assets, deposits, and interest income are moving in the right direction. They're also being careful, as evident by having money ready for unexpected loan defaults. However, there are a few things that should be noted. Their net income would have looked a lot better had there not been a decision for the special dividend payment and the large ESOP release, which leads to some questions for those investors who believe Affinity Bank should have more cash or assets. Overall, Affinity Bank shares is doing well, but needs to be careful on increasing loans that could lead to a larger amount of losses, and must also be ready to react to changing interest rates. Alright, that's our breakdown of Affinity Bank shares' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.